Hi, this is Laurie Morton with GPM Life, here to do a deep dive into GPM Life's Accelerated Living Benefits Rider, what qualifies, and how the payout is determined. So let's get started. First, with GPM Life's Living Benefits Rider, you have the opportunity to accelerate up to 100% of your death benefit. The maximum payment after the accelerated amount has been discounted to its net present value is the lesser of the face amount or up to $1 million. The living benefits are automatically included as long as you're approved through Table D or Table 4. Anything above Table D and the living benefits will be removed. So what qualifies for a living benefit? Let's start with the most common benefit, critical illness. The 8 triggers that we have include heart attack, stroke, cancer, ALS, or what's known as Lou Gehrig's disease, major organ transplant, end-stage renal failure, blindness due to diabetes, and paralysis, which is the loss of use of 2 or more limbs. Please make sure you understand the details of these triggers for you and your clients. Now let's talk a little bit about the second living benefit, chronic illness. When an illness is chronic, it means that it's going to be a situation where you're ill over a longer period of time. So in that case, we accelerate up to 24% of the death benefit annually versus a lump sum like the critical illness living benefit. A physician must dictate that you're unable to perform 2 of 6 activities of daily living, or ADLs, without substantial assistance from another person for at least 90 days. So that includes things like being able to bathe, feed, or dress yourself, go to the restroom, transferring from your bed to your kitchen table or to your bathroom. This also includes you being severely cognitively impaired for at least 90 days. And finally, the last living benefit covered, terminal illness, means you're diagnosed with a life expectancy of 24 months or less by a medical professional. So those are the 3 living benefits that are included in GPM Life's Accelerated Living Benefits Rider. So just some facts to consider. Did you know 1 in 3 people have the probability of developing cancer in their lifetime? Not only that, but about every 40 seconds, someone suffers either a heart attack or a stroke. So the probability of someone having a critical, chronic, or terminal illness is pretty high. Something else to consider. Here are some average national costs for things related to the chronic illness part of this living benefit rider. Many people don't understand how costly it is to be in a semi-private or private room at a nursing home or an assisted living facility. Look at these costs per year. And many types of health insurance, like Medicare or Medicaid, don't cover a lot of these costs, and some not at all. Let's say you don't need to be in a nursing home. None of us want to think that that's going to happen to us. Even if we have a situation where maybe we need a home health aide, those costs can get very expensive over time as well. Now that we know that the need exists, let's look at an example and talk about how the payout is determined. Let's start with a $250,000 death benefit where the insured is diagnosed with a critical illness. Are they going to get the entire $250,000 by filing a living benefits claim? The answer is no. Why not? Let me start by stating the only time the full death benefit of $250,000 would be paid is when the insured dies. That's the true death benefit. The reason you're not going to get that amount for a living benefit is because we are accelerating or paying the benefit out before death. So among other factors, we must take into consideration the fact that because we're paying out a benefit early, we're not continuing to accept premiums. Therefore, we must discount or decrease the amount that's paid out. Think of it as the net present value of the true death benefit. Let's also take a minute and talk a little bit about terminology. With GPM Life's Accelerated Living Benefit Rider, there's a few key words and phrases that are sometimes used interchangeably. Words like accelerate, discount, net present value, or time value of money. All those terms are used to describe the fact that we're paying the death benefit out early and the amount paid will be adjusted to reflect that. So how much is the death benefit discounted? The number one thing to keep in mind regarding how much the benefit will be discounted is very simple. It's your life expectancy. The shorter you're going to live, the more money you're going to get paid out. The longer you're going to live, which is a good thing, the less you're going to get paid out. So you really need to work with your clients on when it's in their best interest to accelerate the death benefit in the event they have a terminal, critical, or chronic illness. Let's show an example of discounting using a home mortgage. Let's say today you're buying a house priced at $300,000 and taking out a 30-year mortgage to finance that cost. So at a 4.5% interest rate, you're going to pay about $1,400 a month. which means the true cost of the house financed over 30 years will be over $510,000. So you've got to look at the $300,000 initial price as the net present value of that $510,000 house at year 30. So now let's look at this concept in reverse and talk about living benefits with this example. We're going to start with the $510,840 as the death benefit of a life insurance policy. The living benefit claim payout is determined by several factors that will reduce the payout. These things include what's the impact on my life expectancy, the amount of the death benefit being accelerated. Are you going to accelerate the full face value or something less than that? The present value of future premiums. Remember, when we pay out early, we're not collecting the full premium. The interest rate plays a role, and we also have some administration or recertification fees as well, minus any existing policy debt. So that then brings us to the living benefit payment, which is the net present value of the true death benefit. So referring to the $250,000 policy where the owner's diagnosed with a critical illness, as we indicated, life expectancy is a key factor. So as an example, let's say they're diagnosed with stage 1 cancer. While a cancer diagnosis doesn't feel minor, we categorize this as minor, meaning that it will likely not have a big effect on your life expectancy. The good news is they caught it early. You're going to live for a long time, and because of that, you might only get paid out $43,000. If you review the range of possible payouts, depending on how much your life expectancy is impacted, it could be anywhere below $43,000, between $43,000 and $179,000, and maybe a little bit more. But you're never going to get the full $250,000 unless you wait to take that benefit at death. A great way to explain this to clients is that if you think of the stages of cancer, 0 through 4, most people understand that. So if you have a stage 0 or 1 cancer diagnosis, you're likely to receive a much smaller payout because they caught the threat early and they can do more to increase your mortality or your life expectancy. If it's more of a stage 3 or stage 4 diagnosis, that's going to have a more moderate to severe effect on your life expectancy, and the payout would be larger. Let's look at another example. Here we have Gail, age 55, who's suffered a heart attack. She has a policy with a $250,000 death benefit. She chose to see how much of that she could qualify for by submitting a critical illness claim. After receiving medical treatment, her doctors classified this as having a moderate effect on her life expectancy. So at that time, she could collect $119,000 by accelerating the full $250,000 death benefit. Now the question is there any death benefit left if she takes that full $119,000? The answer is no, because she would be accelerating the full death benefit. Now the good news is if she doesn't take the full $119,000, there will be a partial death benefit left. And the great news is premiums are reduced proportionately. That means if she only takes $50,000 of that $119,000, she has remaining death benefit in the future. It also means if she suffers another qualifying critical or chronic illness, she can exercise that accelerated living benefit rider a second time, or upon death, the remaining death benefit will go to her beneficiary. A key question we're often asked is what are the differences between the payouts of the different living benefits? With terminal and critical illness, it's paid in a lump sum. The qualifying event happens, the claim is filed, and if it's accepted, the owner gets paid out in a lump sum. With chronic illness, the payments are spread out over a period of years and paid annually. Up to 24% of the death benefit can be accelerated annually, and you'll need to requalify each year. That means if your chronic illness in year 2 is worse than in year 1, your payments are going to go up. Similarly, if your chronic illness or life expectancy has improved from 1 year to the next, then the payments can also go down, and you can decide at that point whether you want to continue to take that benefit or not. But keep in mind the calculation for the living benefits is still based on the same factors that we just talked about, and that life expectancy is a key factor. So I also want to show you a chronic illness living benefit claim payout. So again, we'll use that $250,000 death benefit because we can accelerate up to 24% of the initial death benefit per year. The maximum amount that we're going to start with is $60,000, and it'll be discounted from there. So we can review the life expectancy continuum and see that a minor effect on life expectancy would make available approximately $9,500 a year. Remember that it could be less or more than that amount, depending on how severely their chronic illness affects their life expectancy. This amount is based on the initial acceleration request and may change from 1 year to the next as we recertify annually. Thank you very much for your time, and I hope this video has helped you. If you have any questions, please call GPM Life Sales and Marketing Office, and have a wonderful day. Thanks.